Hey there, sorry for the late video today. Just got caught up with a couple things, but we're gonna take a look at the QQQ, S&P 500, IWM, and then kind of review the grade 8, see where they are at, and then finally we'll wrap it up with the focus list. So first things first, QQQ, you could see a little bit of wick there today. Almost, there's more wick than body. So there's clearly, we walked into supply. It makes sense. We got rejected around the downtrend line. We got rejected at the previous support, now resistance. And we're just closing above the 50. However, on no volume, not enough volume to really be anything excited about. And if there was more volume here, it would actually kind of look worse because that would imply that most of this was selling. So looking at this candlestick right now and then pairing that with how the grade 8 looks, so the heaviest weighted names, you can see clearly a lot of wick. Tesla's running into major significance. Also that previous support, now resistance. I mean, it closed above it, but nothing to rave about. NVDA, some wick running into a previous resistance level. Meta, you got wick running into previous resistance. Amazon, Doji into the 20 exponential moving average and double bottom neckline. Slight pickup in volume. Google, heavy volume doji. Usually means it's a sign of we're gonna get a pullback. Apple and Microsoft, both the heaviest weighted names in the tech sector, cumulatively making up about 25% of the QQQ, which really had me on high alert today when thankfully we closed Apple out right at the top, complete luck, but I was a little concerned with how slow it was moving up this morning relative to the rest of the market, so we closed it out, but that panned out well for us because there's a whole lot of wick here into the falling 50 and the gap resistance. So Microsoft rejected at the previous, or at the downtrend line. So there's just a whole lot of reason to be cautious today. Definitely was not comfortable holding fresh positions, that being DraftKings, Tesla. So I'd rather get out of them break even than roll the dice. It doesn't make sense. If you're ever in a situation where the market is showing, and by the way, this is the FNG, so it makes up all of these names cumulatively and kind of puts it together and what we're really seeing from all these guys combined, and clearly a whole lot of wick and supply. So there's just I don't see how you could be excited to open a fresh position here, seeing where the broader market is at. It just would make a lot of sense. Also, that considering we're short-term extended to the upside, that we're going to get some kind of pullback and then maybe a retest of the short-term moving averages. We're going to get our EMA cross back and then try again. And that's where we'll be looking to put on new positions. So it's going to be sit on your hands kind of the next 3 days. And then we'll look for some sort of downtrend line to play. So maybe we'll be like this. Hopefully we gap down tomorrow. I'd rather gap down than grind up. If we gap down, we could once again test the strength of the bulls, give us more confidence when going long. If we gap down and they hold the line and they push us higher, it's demonstrating strength. It's demonstrating that this strength has a little oomph to it, and that's what we want to see. So I would prefer a gap down to test that and reaffirm the strength so I feel more confident going long. But moving on, we'll have some sort of pullback, maybe 2-3 legs down, and then we could look to go long when QQQ breaks above that downtrend line and the strongest names. So moving on to RS leaders right now. So we got EQT. Broke down. It was actually weak, but it roared back. And now, earnings are 3 weeks out, so it's not really going to be on my prime list because I want earnings to be out of the way. Preferably, the best time to get involved is stock is like a month and a half after the earnings, or I would say within the first month to a month and a half, because the earnings have not fully been priced in yet. It takes usually 10 to 12 weeks for the previous earnings report to get priced in. So that's where you can get the strongest moves. When you're closing on the last like 2 to 3 weeks before the next earnings, most of that price has already been, or most of that previous catalyst has already been priced in. So there's not a whole lot of move left to really eke out of it. Sometimes you'll have pre-earnings runs, sometimes pre-earnings sell-offs, but it's not all that common that it's going to be a significant move in either or direction. So I'd rather just wait until I get my next catalyst. So, but EQT, if we get maybe 1 or 2 days sideways and a break higher, it could be a nice little, a quick trade. And that is options or equity. DraftKings, so it gapped up, it held that gap, and we basically, that was like it clearing the 50, because it's now 1/8 ADR above the 50-day moving average, I think. Oh, it's not. Okay, so even more reason to not be in it. So it got rejected at the downtrend line. It's technically still within the range of the 50, so it hasn't even technically cleared it. And there was quite a bit of wick here, and it also did it on very low volume. So it was just no reason. I was not impressed with the price action going into the later on into the day. It also was fizzling out. It fizzled out way before the market. At 10:30, it started moving lower. The Qs peaked at 11:50, so about an hour and 20 minutes. It wasn't even participating in the market rally anymore. So a little bit of a red flag for me. So yeah, I'm not really interested in this name right now. I would like to see it pull back to the moving averages, and then maybe it will try again at that downtrend line, and we'll get some real volume that steps in. DBI, we got out on the 3rd, I think. Yeah, it was a gap up. So they gapped it up on a price upgrade. We got out right when we saw this candlestick because it was a very high volume reversal. If you take a look at the 930 volume and then compare it to the previous 930s, usually this stock gets volume at the end of the day. And if it doesn't, if it gets it early in the morning, whatever that direction is, it usually sees follow through. So high volume reversal candlesticks, sign that it needs some more time, and once again it played out there. So we got out of it, but it looks actionable again over 1316. This is going to be shares only. TTD, we're waiting for a pullback. So once again, we're just waiting for the EMA crossback now. So we're going to let hopefully the stock consolidate sideways. If not, it will pull back a bit and then catch support at that 10 EMA and then go higher. We go long off of that bounce. It's the same thing for basically everything. Uber, it failed to break out today, but Uber doesn't look as good. And if you were to enter it here, you're technically already 3 days up, so it's just, there's really no appeal to going long at this point. Stocks that have not broken out yet, these are laggards, so they may break out tomorrow, but they're breaking out once the market has already made most of its move, so they're likely to fizzle out very quickly. Best time to enter was Friday, when it's most uncertain, when the rally is really just starting to materialize. Now you're 3 days up, you're pressing it, you're pushing your luck a bit. So we're waiting for, but here's Uber. Take a look at Dash. So here we clear the 50, and we clear the 50 on heavier volume, about 1.5 times the volume. That's what you want to see. That's what I wanted to see from DraftKings, but we didn't get that. We technically are clearing the 50, but lethargic volume. And I should correct it. It didn't quite clear it yet. It needs to have some follow through. But this is on my radar now. I like the volume. I like the big bullish candlestick range expansion. It has all the bullish characteristics you want to see. But I would like some follow through and then just some flagging and then maybe go long. Breeze, this is equities. So once again, high volume doji candlestick. It marks the top, and guess where it got rejected today? Price. It got rejected right at that doji, high volume doji. So there's clearly a lot of supply in this area. I'm not really interested until you clear that area personally. And today, the rejection was, once again, heavy volume. And now we have another reversal candlestick. So there's a lot of supply to work through. This probably won't be actionable for a couple of weeks. SNPS, ZS, Crowd, AMD, all need to, we're just waiting for flags to form. It's going to take 2, 3, 4 days. GPS, gap, nice recovery here, double bottom breakout, slight pickup in volume, but it's now at former uptrend support, which is now resistance. So we really need to clear that, and then we'll look for some kind of flag. I'm kind of going to be stuck on repeat here, but that's what we're looking for a lot of these names. We're just looking for that flag setup. Overall, we're looking for EMA crossback, so the second stage in the cycle price action. First is your wedge pop. Right, your wedge pop, and then you're waiting for EMA crossback, and then you go. This would be the first time you go long, again, where you have really good risk reward, and then hopefully it makes a higher high, and doesn't fizzle out like this. But then you'd have another basin break, and then basin break. So really, it's all about the timing element, getting the best positions. getting in right when the start of the next 3 to 5 day rally is. So you're chasing now if you're going long tomorrow. Here is, oh, this is just some other, is ANF. Looks great. So this stock has been an absolute powerhouse. It's something I've been sleeping on. I missed it here. And then I opted for Palantir here, which honestly I can't complain. It worked out great. But yeah, this is a clear pickup in volume here today. So when a rally is moving, when you're getting a rally, you want to see that volume gradually increasing. So it's very healthy price action here. Also note how tight the price action is. That's footprint of an institution. It's just been a clear accumulation from institutions. You can look at VRT, another one, very tight. It's institutional accumulation. You look at NVDA over here, very tight institutional accumulation. How do I know it's institutional accumulation? I mean, that's not me. That's pushing us and a $1 trillion company up 160%, right? It's institutions that are doing that, and it's just something. It's a common technical theme in stocks that have monster gains. VRT 166%, ANF 110%, CCL very tight. Compare it to before, it had a big move. It's very loose, very loose. And then some institutional accumulation, it doesn't work. And then when it has the real big gain, it's nice and tight. So anyways, I digress. Whenever you see very tight price action, it's institutional accumulation. It's a positive. So AI today had a nice pickup in volume and a nice bullish candlestick, but you have the 50 overhead declining, which is going to be potent resistance, and you're also still within the range of 200. They're about to have a death cross. Really not interested in this until it's over 30.83, but actually I'll get rid of that. SNPS, this is shares only, broke out. We're just looking for the pullback. All right, we just need some bull flag action. I wouldn't be surprised. The market could go up another day or two where it kind of just grinds, but preferably that's not the case. Palantir, high volume doji, just looking for some sort of bull flag. And then once again, here's Futu. This is a Chinese stock, just looking for that pullback. So this is also going to be a stage 2 breakout attempt. Let me zoom out. Yeah. So here it, oh, you know what? It had it did break out, it failed, and then it broke out again, and then pulled back. So this is a stage 2 continuation breakout. But once again, it's a Chinese name, so you gotta be careful. But these names can move. It's 20% in 6 days. I also put on net on the watch list because this is the type of stock where when it gets moving, it really could absolutely rip. So here's 80% in a month, 92% in 38 days, 54% in 6 days, 83%. And this is a cybersecurity name, I believe, net. So it's with ZS, it's with Crowd, it's with PanW, it's with ANET, it's with the dominant industry right now. So I want to keep this on my watch list for a potential equity play. So that's kind of where we're at right now. We're looking for a pullback in the equities, all the indexes. I mean, there's wick here that at least gives us enough reason to be cautious in the coming days. If you're going long, you're taking on a lot more risk. So if you look at the market from a probability standpoint, which is exactly how you should, you want to align the probabilities in the most favorable way, which would be to be buying at the best possible time. So using the cycle of price action, we know the next best time would be in the form of a pullback to the short-term moving averages. That's going to reaffirm that this rally actually has support if it gets a bounce off these moving averages and gives us a low risk, high reward entry. So that's where I stand. I probably won't be entering anything the next day or two, and I'll kind of be sitting back and just seeing how price reacts in the first pullback, because that can be very have a lot of insight packed in there. So once again, sorry for getting this video out so late, but hope it provided some value.